Good afternoon, Valley of the Sun. Thank you for joining me, Nathan Claiborne, fresh out of a fantastic day of continuing education down at the Association of Realtors. Today is Wednesday, March 22nd. I love those when I just learn a ton and commune with other professionals who are trying to do this at a high level. It always energizes me, so I'm happy to be with you today. Active listings on the Arizona Regional Multiple Listing Service, 14,132. Again, that's less than it was last week, less than it was the week before. Same old story. Interest rates, 6.45%. Now, those have swung wildly, and we're going to get to some of the reasons why, because there is a ton of financial news to parse, and I'm going to do my best job to parse it for you, at least to make it understandable from a real estate perspective. Okay? I want to start by pointing out that purchase mortgage applications have been increasing for the last 3 weeks in a row. That's good news. The other thing to know is that prices in this market have been increasing since November. Not a lot, marginally, in the low single digits, but nevertheless, they've been increasing. I heard an agent today talk about how the housing market was going to turn around later this year. Well, it's turning around now, seems to me. We got purchase mortgage applications going up, prices going up, and inventory going down. That's a recipe for a decent market, for a good-looking market. And that's what it looks like from here. Now, let's back up. The national media and the national economy is talking about what? Bank failures! There was a run on a bank! Well, that is good. Making everybody panic really sells a lot of ad space and clicks and eyeballs and all that good stuff. Okay? A good old-fashioned bank run, which is what this was, from two banks that were highly exposed to high-risk markets. So Silicon Valley Bank, obviously startup, very exposed to that part of the market. And Signature Bank, the other bank failure that happened, very exposed to the crypto market. Well, those two markets don't look that great right now. And then they tried to hedge their risk by buying a bunch of bonds whose prices just have been reduced a lot. Thanks to, on my next subject, the Federal Reserve. Today was the Federal Reserve's meeting, and we all hang on bated breath for Jerome Powell to come out and talk about what they're thinking, and we parse his words very carefully. So today they came out and raised interest rates again by only 0.25%. And that is actually what sent mortgage interest rates down 30 basis points. They were 6.75% yesterday. Jay Powell gets up and says, we are raising interest rates, but less than we have been raising them. So they, as you know, they've been raising them by 0.75% for a while, okay? But the effects of that are starting to be seen, and two of those effects are those two banks I just mentioned. They are a casualty of, first and foremost, really piss-poor management, okay? But they're also a casualty of the bond environment. They all tried to hedge their risk with bonds, and the price of bonds went down. They didn't have enough cash to cover, and game over after that. The FDIC, thankfully, and to their credit, full disclosure, I have a family member that works for the FDIC, but to their credit, they did a fantastic job of rushing in there, taking over, making sure that depositors' funds were safe, and they could contain this thing relatively easily. Okay? A lot of banks that hold a big bond portfolio are going to feel crunched right now. That's true. But if they are also being mismanaged, and their risk portfolio is awful or mistimed or etc., they're going to fail. The ones that are smart and have a risk portfolio that makes sense are going to make it through this time. And thankfully today the Fed came out and only raised it by 0.25%. So that tells us that the previous large rate increases we've been looking at are starting to have an effect, enough so that the Federal Reserve Board of Governors think, okay, maybe we don't have to pound on it this hard. We can just pound on it a little bit softer and see what happens. We'll let these rate hikes take effect, and we'll take a look in May. May's the next meeting. It's always speculative what they're going to do at the next meeting when we just finished with this one. But the fact that they slowed it down to 0.25% maybe means, and they set the table to be able to not increase it at all in May, which would be fantastic news. But even the 0.25% rate increase sent mortgage rates down. Let's reiterate that point. Mortgage rates came down to 6.45% with the anticipation of the Fed having an easier monetary policy going forward for the rest of the year. And I think that this doom and gloom that we've been feeling since October is definitely going to start lifting off now. And we're going to start looking at a relatively positive economic environment for the next year and a half. That's my prediction. Now, I want to point out that here in the Phoenix market, prices have been increasing since November. They've been increasing since November. So even though the general economy has felt like in the doldrums and things are kind of transitionary, in the housing market, business as normal. NAR says we're on track to do 4.5 million transactions this year nationwide. That's sort of an average year. That's on the lower side of average, but it's average. 6.5 million that we did in 2022, not average. That's not what we're supposed to be doing. Okay, so everything is starting to look normal, and it's a relief. It is a relief. Now, before I go on too long about the Fed and all that good stuff, ultimately, this is not a bad time to sell or buy a house, because if you're selling a house, you've owned it for the last few years, and you are realizing plenty of equity. And if you're looking to buy a house, interest rates are not at their peaks. Lenders are definitely wanting to incentivize buyers, so this is not a bad time. And sellers are negotiating prices and repairs and concessions. So it is not a bad time to be buying or selling a home. Long story short, okay? Now, next, I owe you the Baller House of the Week. We got a big one today, this week for you on 6527 East Hummingbird Lane in Paradise Valley. This is on the east side of Mummy Mountain, so more on the Scottsdale side, close to 68th Street in Lincoln. Beautiful house, 5 bedrooms, 8 bathrooms, 6,270 square feet, a 51,000 square foot lot, so just over an acre. This was brokered on the seller side by Launch Real Estate and on the buyer side by HomeSmart. Congratulations to those agents. This is a really nice house, but the key, I mean, it's not as ostentatious as some of the ones that I've talked about on here, but the key to this one is that it's basically at the corner of Mockingbird and Hummingbird, very close to North Scottsdale Road and downtown Scottsdale. This is a primo location. And the house is fantastic, but really, you're paying for the fact that you're at Mockingbird and Hummingbird in Paradise Valley. So there it is. Your Baller House of the Week weighing in. I think I forgot to give you the price. Weighing in at $10.999 million. 6527 East Hummingbird Lane. Thank you so much for joining me. I will be back next week with more market data. We'll see how this market starts digesting the new interest rate expectations. It's lots of fun. It's a thrill a minute over here. Thanks for joining me.